OnEMI Technology Solutions, a digital lending fintech, is coming up with its IPO on the 30th of April. They give instant loans, EMI-based credit, and finance small businesses through their platforms like Kissht and Ring, which happens to be mobile first. Here are the IPO details on your screen. So what's the actual business here? OnEMI is essentially a money lending business, but unsecured loans to mass market and underserved customers, which means they can scale fast, but it depends heavily on funding and credit discipline. And to decide who gets a loan, they use data analytics and alternative credit scoring. But it's not all digital. The company follows a hybrid model, which means some loans are given directly through their NBFC arm, while the others are distributed via partnerships. So they need a lot of capital, and that's where this IPO comes in. Around 75% of the IPO will go to its NBFC arm to support more lending, and the rest is for general corporate purposes. If we take a look at the numbers, they are making profits, and shareholders are getting decent returns. But the company relies heavily on borrowed funds, which brings us to an important question. Is it sustainable? Short answer, it depends. After all, it is a lending business, which means factors like economic slowdown, regulatory changes, society's credit behaviors, all these things can affect them directly. So while the business shows strong scale, this risk profile is not low. Now, if you're someone looking for stable, predictable returns, this may not fit you. But if you're comfortable with lending cycle risk and are betting on the growth of digital credit in India, this might just work for you. So if you're planning to apply for this IPO, you can do so with our Ant app. Investments in securities markets are subject to market risk. Read all the related documents carefully before investing.